Hello and welcome to this lesson. So in this lesson we're looking at another day trade example. So basically I'm watching the USD JPY daily chart, and our setup example comes in here. So you can see actually the market has been bullish. So basically our order flow on the daily chart is bullish. So the daily chart is our higher time frame because we are looking at the 1 hour chart setup. This is our higher time frame order flow, which is bullish now. So I'm looking at a scenario where the market is coming into this daily fair value gap right there. So you can see the market comes into that daily fair value gap, and then we're going to look at the 1 hour chart, how we got an order block which will have assisted us to enter that setup. So let's drop to the 1 hour chart so that we can look at that setup example in more detail. So we are at the 1 hour chart, and we're going to look at this example because we have a key. So this is a high probability example because now we have a key level from the daily chart. This is the daily fair value gap as our key level. Then the market comes into that key level, takes out this liquidity back here. So this is on Friday. So we see Thursday's liquidity being run. So that is Thursday's low, and we can call it daily low. So that's daily sell side liquidity is run. Then once we run that daily liquidity, if you look closer, you can see this candle at 1 a.m. took out those daily liquidity. So this is Friday, took out Thursday's lows. Then the market now started expanding higher. So you can see actually this is a bullish order block right here. Once we took out those sell side liquidity, the market expanded higher, confirming this order block here. So once the high of this candle is closed above on this candle at 3 a.m., that is a confirmed bullish order block. So what we can do is now look at potential targets. So basically this is our entry order block. Let's get maybe the coordinates of that high, which is 151.873. So that is our order block. So this is our 1 hour order block. 1 hour order block high. So that is our entry point. So remember we said that you can enter either at the high or the midpoint of the order block. So not always will it get to the midpoint, but if we take this candle's range as our order block, you can see actually the market did get to that. It got to that order block midpoint, but it doesn't mean that it will always do that. So this is just an instance where the order block midpoint was hit. So this dotted line here is our order block midpoint. So this entire range is our order block. We have found the midpoint of that range. So basically, but our entry ideally will be at the high of that order block. So I'm just going to demonstrate shortly how we could have entered that setup. So let's look at some of those liquidity areas that the market may have targeted. So we have that high here, but preferably because now we're on Friday, we had Thursday's high, so preferably we could have aimed for Thursday's high because that is the daily high, and it's very close to this high actually. So that is the high we'll want to target. So this is a liquidity target. Liquidity. This is a liquidity target. So this is our first liquidity target, and then I'll say that the second liquidity target, we have this high here. So this is just areas where you can take partials. Then finally we had Wednesday's high as our final take profit level. So you can see how aggressive actually the market just in one candle comes and takes out those targets. These are just liquidity targets. So basically, let's say you took an entry, a long position at the high of that order block. So let's say you use the high of the order block as your entry point, just like we discussed, and then your stop loss comes in below the low of the order block, maybe plus just add a few pips below it. So you can see already at the first target, we are already getting 1.76R. At the second target, we are already at 3.2R, and then the final target we are at 4.4R. So basically you can take partials right here. So the first target, take partials. Then of course the second target also take partials, and then this one is your final take profit. This is a final take profit. So basically, once the final take profit is hit, you want to be out of that market because we have already taken out various levels of liquidity. So make sure you're paying yourself at these areas here, because the market might get into this area, take out this high, and then maybe start reversing. So make sure that you're paying yourself in every key liquidity area. So this is a daily high, you want to make sure you're paying yourself there. As long as the market is giving you a very good range, then ideally you want to take part in that position. So let's see at maybe a scenario where for example you entered at the midpoint of the order block, a more aggressive approach. So let's say if you took your entry inside that midpoint. So like I said, it will not always give you that entry, so don't always be seeking for that entry. I'm just showing an example where the market actually got into that midpoint, and then you're still using the same stop loss, which is below that the low of the order block. So you can see already, even by the time you're getting to the first partial, you're already at 4R. So that is because the market has entered into deep discount compared to that high there, or the order block high. So you're taking an entry inside the midpoint of the order block, then the stop loss is below the low with a few pips below it. So already at this point here, we're already at 4R. So you can imagine by the time we get to the second target, we're already at 6.68R. Then the final target, we are at this is about 8.89R. So you can see how aggressive actually this market can give you high returns because of just adjusting your entry to the midpoint. But I'll say that when the market gives you that entry, then it's okay, but don't force it, because the midpoint, you don't want the midpoint actually to be closed below. You don't want to see the market coming below that midpoint of the order block. If it does that, then potentially it's going to take out that order block and it's going to invalidate that move. So basically the midpoint should be very sensitive, because you want it to be the last point that the market will touch. If for example this candle here came and closed below that midpoint of that order block, then probably it is going for that low and beyond. So basically that's how you can know that the order block is being violated, if we close below that midpoint of the order block. So basically that's an example of a day trade setup. I hope that was insightful. Thank you so much for watching. I'll see you in the next lesson.